Hey, good morning, everyone. Off another Wealth Coffee Chat. Looks like my block that person and then block and restream. Someone was being a bit cheeky this morning, trying to put some spam up on our chat. Anyway, good morning. Hope you're all well, team. Welcome to another Wealth Coffee Chat. Good to see all of you here this morning. Bright and sunny. Not so sunny anymore in the Gold Coast, the GC. It's gone back to being wet and yucky. But anyway, wherever you are, I hope it's well. I hope you're well. Marvellous Monday. While things are getting warmed up, while people are jumping on, might just quick do some intros. Jason Witten's my name. Most of you guys know that already. But if you don't, if you're new, if you're brand new, say hello in the chat. Let us know where you're coming in from. Let us know your name, where you're coming into the live from this morning. Good morning, Brendan, Alison, Luke, Laura, Heidi, Sharon. Yeah, a few spammers out there. Brendan, Trace, Chris, Deb, good morning. Hey, thanks for joining us, team. Thanks for joining us, crew. Welcome along. Another Wealth Coffee Chat. We've been chatting for a while now, if you're new, and we've been talking about property investing and what's going on in the property investment marketplace. Hey, there's Michelle, all the way from Maroubra. Welcome, Michelle. Great to have you here, mate. Paul from Randwick. Fantastic. Patrick from Wagga. Patrick, back in my day, back when I was a bit younger, I spent a couple of years in Wagga, out at the Air Force Base, actually. I was a technician. Well, I was studying to be a technician. That was fun. Nice town, Wagga. Enjoyed my time there. It was wonderful. Welcome, mate. Thanks for joining us. Karen, good morning to you. Aaron. Good to see all of you guys in this morning. And we're trying to make sense of this weird and wonderful game we play called the property investment game. Certainly things there's always something going on. Lee, all the way from Tasmania. Hey, Lee. There's always something going on, isn't there, when it comes to the world of real estate and the idea of property investing. This morning I thought we'd talk about something interesting, about who you choose in your six-star team. For me, over the years, I've seen many thousands and thousands of investors build their portfolios and do certain things. And certainly seen people, unfortunately, think that cheap is good when it comes to real estate. And doesn't mean you don't get a bargain. It doesn't mean you don't find something well valued or well positioned or well priced. But cheap certainly doesn't stack up when it comes to becoming wealthy in the world of the real estate game. So this morning I thought we'd talk just a little bit about that. I have a question. I wrote it in the title of the chat. What is 3.5% property management fees, or that's pretty well a 50% discount, 50% off? What does 50% off your property management fees get you when it comes to your property manager? Anyone know the answer to that? Put it in the chat. What is 50% off? What happens when your property manager charges you 50% under the regular market rate of property management? Put that one in the chat for me. And some of you might already know this, but put that in the chat for me. Tell me, what happens when your property manager running a business charges you 50% less? Yeah, headaches, yep. Yeah, 50% less care, 50% less quality. Yeah. They don't do a good job. Well, all of those are absolutely true, because to be honest, I think they should charge a little bit more. However, what is happening out there right now in the marketplace, yep, 50% less work done by them, yep, for sure, this is what it gets you. This property management business, your Bonza, was going around for about 2 or 3 years and saying, hey, we think property management should be heaps cheaper, and let's do it this way. We'll charge you 3.5% property management fee, and, let us manage your property. Unfortunately, for all the people who believed that that was a good choice, didn't really understand the mechanics, the dollars and cents of what it takes to actually manage your property, ladies and gents. And today I wanted to sort of maybe talk about this when it comes to the idea of being cheap. Being cheap. I said this the other day, and it was a little bit controversial. It really grinds my gears when property investors don't look after their properties, because you're not a slumlord, folks. You are a property investor. You're providing a dwelling to someone to live in. So look after it properly. If you buy a good property and look after it well, and you'll get a good tenant, and you'll end up with good wealth into the future. That's my firm belief. But let's have a look at this. Why did Yabonza collapse? Why did this kind of publicly listed company, collapse and go broke, folks? Well, it didn't take much. And myself and Sam were looking at this, and people were asking about these properties, this stuff. Morning, Hardik. These companies and saying, well, this is the future. And I wasn't convinced that this was the future. Charge people less to do less on their properties and their property management. But let's just do some math on this right now. Let's say, let's say if the rent was $500 a week, all right, per week, what's kind of the going rate out there in the marketplace when it comes to property management? Chuck that one in the chat for me, all right? Depending on where you are, I reckon, anywhere from Melbourne, sort of, 6 to 7, and then you're looking at WAs like 10 to 11. I think the Western Australians have got it right for once. There's no movement at the bottom, Brendan. You're dead right. Yep, 7s and 8s. All right, let's just do 7% this morning. 7% this morning, okay? So if you have a property that is renting for $500 a week, the property manager charging you 7%, makes $35. $35. Now tell me, folks, anyone in the chat here, what's your rough hourly rate? What's your rough hourly rate right now when it comes to your profession? And it could be vast and varied and all that sort of stuff. And some people don't have an hourly rate. Some people have a job and that's what they do, and it's irrelevant of the hours, right? But let's just work it out as we go along here. Oh, I've got another spammer here. Block them and then block this person. Crikey, got a few spammers this morning. Rack off, spammers. So, what's your hourly rate? What is, what do we get paid out there? What's your salary? Blah, blah, blah. If you think about this, an hourly rate, let's say, for someone in this profession, you're probably talking about 60, 70, $80 an hour if you sort of broke it down into an hourly rate. Now, let's say that's kind of 30 minutes. 30 minutes that someone can spend on your property, $100 an hour for plumbers. Yeah, exactly. So, think about it in those terms. When it comes to somebody looking after your property, ladies and gents, what are they earning? And, to be honest, I think they do, by and large, most property managers do an okay job for the money. And some do an amazing job for the money. But let's talk about this and understand, at the end of the day, certainly one place I would never skimp when it comes to my property portfolio is my property managers. Not and to be honest, where would I skimp anyway? I don't think any of the professions or any of the experts or professionals that I want on my team, certainly for me, I wouldn't be skimping on. Let's have a look at this. If we have a look at our 6-star team, you guys have heard me say this before, you have your, what we call mentor, coach, investor, advisor, MCIA, right? This is the person who helps you with your strategy, high-level strategy, helps you in that acquisition phase, right? Okay, how do I get it going? The next person, tell me in the chat right now, who are the people in your 6-star team? There's usually 5 really important ones, and there's like what we would call like a multitude of ones that you may need in other places. But tell me right now in the chat, who are these people in your 6-star team? All right. So you need a coach, you need a mentor, you need an advisor who is property centric, ladies and gents. Yep. Your property consultant. Yep. So I'm going to do this in sequence, Patrick. So for sure, now you need your finance. You need your finance specialist. Someone who understands how to get you the right lending, ladies and gents. That's pretty important. You certainly need your property consultant who is in your acquisitions team, the person who gets the deals for you, finds and locates and puts together property opportunities. You need your property manager, your prop manager in your team. Once you own some real estate, you want to keep it and manage it for a while. Property manager, dead right, Hardick. You need your accountant. They're important. And Hardick said it right there. The last one, this is a terrible drawing. Your fin planner, your financial planner, folks. All right. Not a good 6-star team drawing today, but there you go. Now, let's talk about these team members. Let's go through this. Let's go through it. All right. So, for example, wealth coach for sure, finance, acquisitions, property manager, accountant. Boom. Good work, Alison. All right. So let's have a chat about this, folks. Let's look at the amount of time these experts, these people spend looking after your property, okay? Your property, okay? And what they get paid for doing that. Right. So your coach, your wealth coach, your strategy coach, awesome people. You've got to have those people on your team. Tell me, you buy a property, by and large, how much time physically does that coach spend at your property? How many hours, ladies and gents, how many hours does that coach spend at your property? By and large, to be honest, most of them, 0 hours at the property. Never visited it. Now, this is not a bad thing. I just want to point something out. When we're looking at this stuff, and I want to put some stuff in perspective today, so stick with me with this conversation. 0 hours. All right. Tell me now, your finance broker, how many hours, how many times does your finance broker go and visit your property for you? Well, 0 hours. Okay? What might happen at the start, one time, is a valuer might pop by. Might. Depending on what you're trying to do. Your property and acquisition person, well, they certainly spend time at the property or listing the property, creating the property deal, finding it. So let's call it 2 hours. 2 hours all up, maybe a bit more, maybe 5 hours, maybe 10 hours, but they spend some time there, okay? They spend some time there. And I'm just going to jump across this little thing here just to make a point this morning. How many hours does your financial planner spend there? Do they visit the property ever? No. 0 hours. Your accountant. How many hours does your accountant spend there? 0 hours. All right. And let's say this is, folks, over a 15-year period. 15 years. 15 years minimum you're going to own this property for, all right? 15 years. Put that in the center there. 15 years of ownership. Ownership. All right, so tell me right now, are you getting the picture? How many hours will your property manager spend visiting your property? Visiting your property, looking at your property, taking photos of your property, inspecting your property. Tell me, ladies and gents. Good work, Trace. You're a ledge, mate. Take care of your property manager. They're taking care of the biggest piece of wealth that you have 99% of the time. Okay? Yeah. Awesome. So let's do this. At the very least, your property manager is visiting your property twice a year. At the very least. They usually spend between 1 and 2 hours there doing inspections and taking lots of photos and creating reports for you. So at least, let's say 4 hours. Yep, every 3 months. Yep, depending on where you are in Australia, it's legislated as well. You've got to sort of visit 3 months or 4 months or whatever it is. So let's just say it's twice a year minimum. That's at least 4 hours visiting the property. Okay? At least 4 hours doing stuff. Then there's probably at least half an hour to an hour every month on your property when it comes to the admin, trust accounts, bank accounts, collecting rent, paying bills, etc. So let's just do that. Let's just say there's an hour every month, and then we add another 4 hours. So that's 16 hours a year, okay? Times that by 15. Anyone know that off the top of their head? I don't, so that's what I got a calculator. They spend 240 hours. 240 hours at your property, looking after your property, routine inspections. Exactly, Hardik. Okay? And that's probably conservative, ladies and gents. Compared to, look at this, compared to all of these other people. Now, that's the way it is. That's the person who looks after physically once the deal is done, once you've purchased your real estate team. But like Trace has done there, make sure you put in perspective what's going on with your property manager and who you reward. And don't be cheap. Don't be bloody cheap. Don't chip the property manager 1% and then expect, them to thank you for it, for their business. That's ludicrous. I think that's crazy, all right? What's that, $4 or something like that a week? There you go. Anyway, for me, for you, ladies and gents, the point of today is, cheap won't make you wealthy. And understand of your 6-star team, the people connected, associated with creating your wealth in the future, who spends what time, where, and appreciate what that looks like as you roll along, okay? So there you go. Anyway, anyone who's charging you less than 7%, I can tell you this right now because we run a property management business. I know the dollars and cents. I know the numbers of it. Anyone who charges you less than 7% for property management will go broke unless they're just a one-person manager and they work from home, which there could be some property managers out there. Those businesses cannot survive. The dollars and cents do not work. They don't work. I've sliced it as 1,000 different ways. Anyway, there you go, folks. Wealth Coffee Chat done and dusted this morning. I hope that makes sense. At the end of the day, cheap doesn't make you wealthy. I can tell you that right now, but you don't have to, spend more than you should. Just make sure you understand who is doing what and make sure you appreciate it. Hardik, 8.8. 7 to 8 is 7 to 8%, folks, is an absolutely acceptable number. Yep, 100% every day of the week when it comes to, well, there you go, Hardik. It depends on where you are. Like, I mean, in Western Australia, they charge 10 to 12% as you go along. So there you go. All right, folks. That's it. Wealth Coffee Chat, done and dusted. Yeah. Yeah. There is a big difference between cheap and inexpensive. You're dead right, Luke. You're dead right, mate. All right, folks. Be awesome. Be well. You guys be good. Thanks, Patrick. Thanks for joining me. For the newbies, thanks for joining. Fantastic to have you here. Yeah, join me tomorrow for another Wealth Coffee Chat. Remember, between now and then, this thing's a marathon, not a sprint. Take your time. Be patient. And remember, we're about buying well and not selling, because the long-term ownership is where you create that wealth, folks. All right, then. Adios, team. You guys be awesome. See you tomorrow, around about the same time. Bye-bye. Thanks, Aaron. Thanks, Hardik. See you, Trace. Go away, spammers. Damn spammers.